of back roads of Illinois. We were bringing latest agricultural news and markets update on back roads of Illinois. Bring you like inside of the markets and interview with people in the agricultural industry for farmers and ranchers in central Illinois and across the Midwest. Today is edition of Back Roads of Illinois. We were Central Illinois agriculture source, and in the Midwest alongside in Central Illinois agriculture, we were glad you're here on a Monday afternoon. We were joining with Connor Bridgman from Advanced Trading in Assumption, Illinois, and we were going to talk with our friend Sam Hudson for Corn Belt Marketing. Then we were going to talk about cover crop with Doug Hanson from Pro Harvest Seed in Central Illinois. This is your agricultural news and markets update on back roads of Illinois. This is the acreage report on today from the Department of Agricultural. Traders are looking forward for this acreage report from the Department of Agricultural because it is pretty bearish from June acreage report on the beans. This week is having some wet weather in the Midwest alongside in southern Indiana with the rain from Hurricane Helene in southern Indiana, but it's coming for dryers on this week in southern Indiana. We were watching for the ethanol debate on the campaign trail. Kamala Harris and Trump for both are against the ethanol industry in the Midwest, especially in the E15 for year-round. We were going to talk about cover crop with Doug Hanson from Pro Harvest Seed in Central Illinois. Stay tuned on Back Roads of Illinois. We were going to talk about cover crop with Doug Hanson from Pro Harvest Seed in Central Illinois near Champaign County. We were welcoming him on the show.
Glad to be here.
How are you today?
I'm doing real well. We're getting geared up here. It's Monday morning, the 30th of September, and we have the best forecast we could ask for in Northeast Illinois. Moving into harvest, got a little rain to get some cover crops going here the last couple of weeks. Anxious to see a lot of farmers get their corn and soybeans out so we can get some more cover crops and wheat in.
Let's start with our conversation about your company in Central Illinois. Could you?
So Pro Harvest Seeds is a family-owned regional seed company brand. Primary focus for the company is corn, wheat, and soybeans, using all independent sources for our genetics. And then we also have a solid lineup of wheat, and then we provide forages and cover crops. It's a pretty substantial part of our company as well. And we have about 130 dealers throughout the whole Midwest that are helping to support the products that we have.
You guys are teaching about regenerative agricultural.
So myself, I'm a livestock producer and have been using what people call cover crops, or been using what I'd refer to as summer and winter annuals. These products are things that we've been using on our own farm in Danforth, where we got about 80 acres that is all fenced in, and we run just cattle on that grazing program. Use a lot of permanent pastures, and then use a lot of cover crop blends, or winter and summer forages. With that, I have been in a lot of circles the last 20 years, and the word regenerative agriculture kind of popped up about 12, 15 years ago. I started seeing what that was doing in other parts of the country. And yes, as a company, we have been, supplying opportunities, creating forage plans, creating cover crop plans that do address a lot of the goals of regenerative agriculture today. So that regenerative agriculture is kind of an animal. It's a big animal when you look at it. But there's a lot of things that we can do with perennial crops, that we can do with annuals, and that we can do, with corn, soybeans, especially if you throw wheat into that rotation. And then we, still have those folks that are utilizing alfalfa fields and utilizing corn silage behind some of those products. So those systems, kind of are a great way to get started into regenerative agriculture.
Doug, do you guys have a test plot in the plant in Askum?
Well, that's a great question. We have a really nice corn soybean. Want to try to kind of narrow things down. We feel that that center part of that cover crop product guide is a great way to do that. And then, like I said in the opening introduction, we have 130 dealers and a nice dealer locator on our website. So you can call someone that's more local to your area and ask some questions. And then, of course, you can always call myself and Chris Basham out of our offices here in Askum, where we do handle a lot of information and take on a lot of problem solving when it comes to cover crops.
Every farm is designed different. How to explain the farmers who have a trouble with cover crop?
No, you're right, and that's not unique to Illinois by any means. It's not unique to any one county. So one of the things that we can generally do, if somebody's just looking to go down that regenerative road and get started and is just wanting a simple, a cover crop, a lot of people will start with using just straight winter rye or one of our winter rye blends, and they'll use them into corn stalks. So they either, would fly them on in August or September, or after harvest. You could even, broadcast it with dry fertilizer and then work it in with a vertical till or a light disc application. That in itself right there is a great way to get started and see how some overwintering cover crops work. And we definitely see better weed control the next spring and all next summer in a field like that. So even if a person is a little overwhelmed with cover crops, just simply using some winter rye or winter rye mix into corn stalks in the fall is a great way to get started.
Do you have any final thoughts or recap of our conversation?
Well, I enjoy being a part of your program. I like the name of your web of your podcast here and everything, and I absolutely like what you're trying to do here for the farmers and for us as companies that are trying to help people down that regenerative road or help people down with cover crops and soil health and improving your soils. So I'd like to thank you for doing this and look forward to following your podcast in the future.
Thanks. We enjoyed our conversation for today.
Well, good luck and keep finding other resources to help people that are going down that regenerative road and people that are looking to improve soil health.
This is Doug Hanson from Pro Harvest Seed in Central Illinois on back roads of Illinois. This is your agricultural commodity markets update on back roads of Illinois. Corn futures are down at 5 to 10 cents. Soybean futures finished and down 7 to 8 cents. Wheat futures finished and up 3 to 4 cents. This is your livestock markets update sponsored by Kyle Bumstead from Allendale Incorporated. Cattle futures finished and down 4 to 6 cents. Feeder cattle finished and down 8 to 9 cents. Lean hogs finished and down 8 to 9 cents. Crude oil finished in up 2 to 4 cents per barrel. Dow Jones finished in up 3 points. This has been your morning markets update on back roads of Illinois. We saw the acreage report on this morning. However, let's digest the report from the Department of Agriculture. All right, we are glad that he is with us for this. We were joining with Connor Bridgman from Advanced Trading in Assumption, Illinois. How are you today?
I'm doing good, Caesar. Thanks for having me as always. Always enjoy doing this and catching up. A lot of market activity since the last time we talked.
Let's start to digest with these numbers of the acreage report on this morning. Could you explain to our listeners?
Yes, so we had a quarterly stocks report from the USDA that came out at 11. Um, and so we saw corn, soybeans, wheat was going to be the focus, and the star is definitely going to be the corn number that came out. So soybeans and wheat were generally in line with expectations. They had it at a 342 million soybean quarterly stocks number. The trade was expecting 351. Wheat came in at a 1.986. Average estimate was 1.973. Generally pretty close to in line with expectations. Now the corn number was slightly below expectations. Average trade estimate was 1.8. We came in on the low end of 1.76. So it's good to see the corn market got excited. We saw December corn up as much as almost 9 cents. We closed the day up about 6 3/4. And so, given the year we're in, given the potential for big supplies, I think we'll take it. It's good to see, you know, when you look in the rear view, it's probably it makes sense we maybe underestimated quarterly stocks just because we probably didn't take into account how much low prices, big carryout really curbs some of the demand. So overall message with the quarterly stocks report, corn was the leader, a little bit under than expectations. We saw corn rally today, soybeans close significantly lower off the lows, but much lower than where we started. It really chopped around a lot, and then wheat up ever so slightly.
Who is the winner for the report from this morning?
The winner from the report, I would say if we can see higher prices in the middle of fall or maybe right before harvest is really ramping up, that's a win for the U.S. farmer, right? We'll take it. If you're underhedged, undersold, the market is giving us opportunities to maybe get more in line with where they wanted to be in terms of sales or protection. So I'll always take a rally into harvest, before harvest. I think I'm going to call that a win for the U.S. farmer.
Connor, how is your area of the harvest season in central Illinois near Decatur?
Yeah, we've seen some action, corn, soybeans, both, a little bit behind in terms of corn acres that have been shelled, a little bit more behind than probably I would have guessed a month or two ago. And I think that's a testament to the low price environment. I don't think guys are in a big hurry to pay these drying costs if they're delivering corn to the elevator. So they were perfectly happy letting it dry down. When beans are ready, they went and cut beans. So we're seeing, I don't know, maybe the first 5-10% is out in my immediate area in central Illinois. Now going forward, I think the corn is going to have ample time, has had ample time to dry down. It looks like we have a very favorable forecast. I think if we talked again in 10 days, it could be a different story. We could really see harvest ramp up. Now, yields I've heard, were It's going to be variable depending on areas, even in my little pocket in central Illinois. But overall, the debate is, are they great or are they really good? Maybe some of those early soybean numbers were a little bit lower than I thought, but I've been hearing some really good soybean numbers, Caesar, and some pretty, on the corn yields. Really, it comes down to, is it really good or is it great? I think generally above APH. Uh, really good yield so far. It's going to be interesting to see what the later planting corn, if it continues that trend, or if it hopefully, knock on wood, it gets a little bit better.
How is the corn cash market indicator like a DM in Cargill?
Yeah. So cash markets are for a fall delivery are historically weak. So if you looked at a local elevator, you're probably going to be at a 42 under on corn, and then anywhere from a 40, 45 under on soybeans. Um, and so usually I would call that weak, definitely weaker than previous years. And even looking kind of at a maybe a 5, 10 year average, that's pretty weak going into harvest. But the question I ask myself is, does it need to get better? And so if we have a big crop coming on, we know that elevators, generally speaking, we're not able to go into this harvest completely empty like they were in previous years. Now, with this delay, with rains, and maybe with guys cutting beans, they'll be able to continually ship corn and get enough space. But there's a lot of factors working against us if we're really trying to see this uh, corn soybean basis improve. And I think part of that is going to be, our export market. Hopefully, this is healed, but the Mississippi River has been lower with the precipitation. Hopefully, that is no longer an issue, and we can see a good amount of barge traffic, and hopefully that'll bode well for exports. The rail market, we've seen potential for strikes for the rail markets that are going to Mexico, which is not a good factor. And then also we had this Eastern labor strike on the East Coast that could be a significant disruptor. So basis is weak, the cash market is weak, but I really feel like there could be potential. It could definitely get weaker if we see some big corn lines and we see elevators, places start to get tight on space.
The markets are currently lower than previously years, but what is your reputation for the markets?
Yeah, we're the market. I had an old mentor that always said, always ask your question, what is the function of the market right now? And so 2 or 3 years ago, the function of the market is it needed to increase supply, right, and curb demand. And so how it does that is we see higher prices, and 2 years ago we saw significantly higher prices. But then the market does a very good job of increasing the supply, um, reducing the demand, and suddenly, coming off of 2023 into 2024, we've got enough corn in the world. As of right now, right, this story could change very quickly depending on South America and other factors on the soybean market, but we have enough soybeans too, and for that we've seen the lower prices. So going forward, right, there's always that potential for the black swan event, for some type of disruptor, whether it's geopolitical, whether it's what we're seeing in South America where they're dry and we affect the supply side. But if we don't see those factors, we're gonna have days related to these markets, and politics policy is going to be a big part of that.
Do you have any final thoughts or recap of our conversation for today?
No, I think I about covered it in that rant just before. Leading we're going into harvest. We've seen the price rally. I think it needs to be it's an actionable rise. So we need to be taking advantage of this. When I say that, right, I talk about hedging into the uncertainty. The key is we got to be hedgers. I go back to 2020, Caesar, where we saw a fall price rally. We were able, in my area, we saw $4 corn off the combine, and I saw a lot of producers sell that price, right? We weren't able to see profitable levels in the fall for quite a while. And so they took advantage of that. And then about 2, 3 months later, we saw the price go up to $7. And so it's worth, we need to be hedged, but make sure we're keeping that upside in case things fundamentally shift, right? Let's make sure we're always a cheerleader for higher prices, but also let's make sure we're staying hedged. If Brazil, South America, let's not kid ourselves, they still have potential to grow a very good crop, and one that could be put in the ground in time, right? We've seen planting delay rallies before. We saw it about 3, 4 months ago in the United States. Turns out that we got the crop in time. We've got what the USDA is telling us is by far and away a record corn yield and a record bean yield. And so, I think we need to be cognizant of that and being proactive in this markets and at this time frame. Those are my closing thoughts. So I think with that, thank you for having me. Anything else, I'll be more than happy to answer.
Thanks, Connor, where people can find you for your consulting services.
Yeah, so I'm a broker with Advanced Trading. So, feel free to look us up. We've been in business for a while. And then I also do ATI Pro Media, where we do our daily commentary on YouTube, Spotify, Apple Podcasts. Feel free, it's free. Tune in if you want to see what we're talking about. Myself, Tommy Grisafi, and Brady Huck, my coworkers. We're doing that every day. So if you're interested, tune into that. Feel free, reach out. You can find my information on Advanced Trading's website. So, yeah, reach out anytime.
This is Connor Bridgman from Advanced Trading in Assumption, Illinois, on back roads of Illinois. We are welcoming back to the show with Sam Hudson out of Brimfield, Illinois for Corn Belt Market. Welcome to the show, Sam. How are things?
Pretty good. Harvest has started, trucks are rolling, combines are in the field, forecast looks good. So it's that time of year again. Prices have even put in a little bit of a recovery of late too, so that's helpful. But just on the front end of things here, I think we'll hit the halfway point here probably in a couple weeks, and pretty soon it'll be Halloween and Thanksgiving.
Let's start with our conversation about the corn market. How is it with today's report?
Pretty good. We actually saw a higher close. Actually, the highest price for the move here that we've seen for quite a while since the drop that we saw back in early August. And not a lot of new information. We did get our stocks report today, came in about 80 million bushels lower than what the trade was thinking. So I just continued our path of least resistance, which is higher. You've got funds covering shorts, some world importers buying corn and soybeans from the U.S. And it comes at a time where hedge pressure hasn't been real prevalent because we're just getting on the front end of harvest. Like I said, the next 2, 3 weeks, you could see that change a little bit, and we'll see how basis reacts in the meantime.
What compared with the June report?
Well, keep in mind that these are just quarterly stocks figures. So the feed number, some of the residual usage can be kind of a moving target. We don't really know where that is every time. So when they go, basically, in a couple of weeks when they see the October WASDE, we'll see a corn number that's at least 80 million lower than this, unless they actually yields up. And that'll be the next card to follow is to see how USDA makes those adjustments. I think so far from what we've been seeing around the areas, it supports the idea of Illinois' big yield. I don't know if it's as big as what they say it is. But we are seeing big enough consistencies that we're going to have lofty averages for the entire nation. I think as you get west of Des Moines and east of Indianapolis, you're going to see a bit of the edge come off of production, and that could keep things from really being over the top. At the end of the day, South America's weather is going to be more important than anything here over the next 3 or 4 months.
Sam, how was your travel experience by seeing the field in the Midwest and Central Illinois?
Yeah, been doing some travel. This summer we saw Really just outstanding crops around here, from a foliar standpoint, just very good conditions in general. A lot of areas out here had too much water early, then not enough late. As you move west, I think the eastern part of Iowa is very similar to what we experienced. In that northwest part of Iowa, southern Minnesota, they had a lot of water early. And we're definitely seeing a drag on yields out there, maybe 40 to 65 bushel beans, corn anywhere from 130 to 230. Eastern Nebraska, kind of the same thing. They're very dry finish. And so I-80 corridor, Nebraska is a little bit better. And there again, it just supports the idea that we've got probably pretty solid numbers this year on the whole. But can we really push those high-end numbers with some of these areas really struggling into the finish line? At the end of the day, dollars per revenue, from an acreage or dollars per acre on a revenue standpoint around here, things look pretty good. I mean, if you can get 80 or 90 bushel soybeans, got a little bit forward sold and sell the rest even at 10 or 10.50, that's pretty good money. And that's what most people would be planning for early. If you don't have those yields, though, it becomes an insurance question and an overall question about, what you're going to have in general going to the end of the year. And that's really going to be a time frame where cash flow needs are going to start to rise again. January 1st to March 1st, as cash rents come up, I think that's going to help, continue to draw bushels out of inventory as we get into those winter months.
How was the yields in Iowa and Minnesota, central Illinois near Peoria and Bloomington?
Around here, getting corn yields anywhere from 230 up to 300 bushel per acre. As I mentioned, you get out into Iowa, it's a lot more variable. You've got yields there anywhere from 130 to 250, 230 bushels in the areas where they had a lot of water early and then dry late. Southern Minnesota is very similar. And so I think that's where we're going to see the drag into those outlier areas, as well as the Mid-South. You get beyond Southern Illinois, and there's some tough conditions there as well. We'll see what changes there, and we'll see what South America's weather does. If they stay dry, world buyers won't really have a choice.
Is there anything would you like to tell our listeners about the cattle markets for right now?
We've had a really good run in those markets. I feel like from a producer and hedging standpoint, it's providing a second chance to kind of get some profitable hedges underfoot. We've seen a little bit better trade in the equity markets, which I think has definitely been a help there, and got some of the negative headlines on just the beef industry and packing industry in general that we behind us from back in August. So at this point, we're dealing with a market that continues to struggle to really build numbers. But the question is, what does that demand do in the meantime? And so I think this is a rally worth rewarding, but doesn't necessarily mean it's completely over. And I think as we get through this election, as we get over through the next few years, inflation is going to remain a hot button topic, and how all of this filters in from an economic standpoint is going to dictate whether or not the numbers we have now are going to be enough or not. And I just think you gotta continue to reward markets on rallies and take the bird in the hand approach.
What happened to the lean hogs markets?
We've seen an improvement, for several months now. Cash prices, pork prices have been, grinding higher. Lean hog index, leveled off. At this point, though, I think we've got a big boost from the fact that those beef prices were so high, and poultry, pork prices really, I think, can benefit from that. After that big drop in beef prices, though, I'm not so sure that we won't see a bit of a blowback. And keep in mind, production can really, ramp up pretty quickly. So that demand sentiment as we get into the fourth quarter is really going to help dictate what that direction is going to do and what we need to do into the first quarter of next year as well.
Do you have any final thoughts or recap of our conversation?
Politics, I think, are going to be a big deal moving forward here. We got a pretty good idea what crop size is and isn't here in the U.S. Assuming South America's weather, shows at least some semblance of normalization, then I think it's the politics you have to look at. What does our policy look like? The biofuel policies in particular here for the next several years, and whoever wins the White House is going to have a say about that. But at the end of the day, how much are we going to support the ag community, and what does our global, economy really look like? Because at the end of the day, we can talk about tariffs, this and that. At the end of the day, those buyers are going to do what makes sense for them from an economic standpoint. And if we fit into that equation, that's better for us. And if we don't, then we're going to be playing from behind.
Where people can find you for your consulting services.
Yeah, www.cornbeltmarketing.com or 800-655-3380.
Thanks, Sam.
Thanks, Cesar.
This is Sam Hudson from Corn Belt Marketing on back roads of Illinois. This is close bell numbers of the commodity markets from Kyle Bumstead from Allendale Inc. November feeder cattle $, 800. Closing at $234.90. December live cattle plus $, 325. Closing at $184.80. December lean hogs $, 100. Closing at $73.275. December corn plus 6 single quote 6 closing at $4.24 single quote 6. November soybeans minus 8 single quote 6 closing at $10.57 single quote 0. December Chicago wheat plus 4 single quote 0 closing at $5.84 single quote 0. December KC wheat plus 7 single quote 0 closing at $5.83 single quote 6. Closing quotes provided by Kyle R. Bumstead Branch Office Manager Erickson, Nebraska Allendale, Incorporated. The risk. Thanks for our guests on today's program. We're running out of time on our show, but you can listen it on whenever get your podcast that's been back roads of Illinois. I am Cesar Delgado. Have a good day.